Hello, this is Mijun from Maichio Silwan University. Today is January 6th, and let's start today's Big Jushim segment. Welcome to Mijun, where we consistently stick to the fundamentals of investing in United States stocks. Yesterday on the Mijun broadcast, I said, if you're afraid of the AI bubble bursting, watch this video. With the title, I shared my confidence in artificial intelligence with you all once again. Actually, this week there's a very important event taking place for those investing in AI beneficiary stocks. It's an event called Consumer Electronics Show, which stands for Consumer Electronics Show, held once a year. So right now, leading companies like Nvidia, Advanced Micro Devices, and Meta are gathering in Las Vegas to showcase their technological capabilities. About 4 hours ago, some news related to Nvidia came out, so I'd like to introduce it to you. Now you can read articles on Seeking Alpha in Korean. You just need to come to the settings here and change it. Right now, the article is displayed in English, but you can view it in Korean. After that, you can just go back to the original article. Alright, then let's take a look at what this article is about. This is news that Nvidia has unveiled Alpha Mayo, the world's first thinking autonomous driving model. We should listen to what this is about. Nvidia's Chief Executive Officer Jensen Huang unveiled Alpha Mayo, an open model series built for autonomous driving, during his keynote speech at Consumer Electronics Show 2026 in Las Vegas on Monday. Today we introduced Alpha Mayo, the world's first thinking autonomous driving model. Now vehicles not only drive as we expect, but they can also independently reason and respond to any situation they may encounter while driving. So now you can see that artificial intelligence, especially autonomous driving models, have gained the ability to think and handle various situations. Mercedes-Benz Group is making an appearance. Their new CLA model is said to be the brand's first vehicle equipped with the Mercedes-Benz operating system platform. So, it features autonomous driving capabilities with Nvidia's full-stack DRIVE autonomous vehicle software and AI infrastructure acceleration computing solutions applied. It was announced that for this purpose, Yangsan has been working together on this project for several years. According to Jensen Huang, these vehicles will be released in the United States in the first quarter of 2026, so within the next 2-3 months, and in the second quarter, they will be released in Europe. In the second half of 2026, they will enter other markets and regions. This is what Jensen Huang announced. This is the first large-scale physical AI market, and now AI has become a complete reality that we can see. He said that he is confident that within the next 10 years, a significant number of vehicles worldwide will become autonomous vehicles. For people investing in AI beneficiary stocks, that's a very exciting statement. Jensen Huang says that in less than 10 years, most of the vehicles on the road will be autonomous vehicles. I really want to try riding in one of these vehicles. I'm curious about when they'll come to Malaysia. The world changes day by day like this, but we feel very uncomfortable with change. It's human nature to dislike change. Seeing it that way, you focus on the negatives, and your expectations that things won't work out may grow. But I think that if you open your mind a little, apply and reflect changes early, and keep up with the changes, you can create a lot of wealth as an investor. There's a saying in the stock market. When you look at bears and bulls, bears seem very smart, saying things critically and analyzing from different perspectives, pointing out what's wrong with something. At first glance, it sounds really smart. On the other hand, optimism can sometimes seem a bit reckless, but the important point is, usually in the stock market, it's not the bear, but the bull that makes money. I think it's important to remember this. Alright, then let's start today's big stock news, beginning with a bit of excitement thanks to Jensen Huang on January 6th. I'll summarize yesterday's United States stock market trends today. The Santa rally for 2025 and 2026 hasn't officially arrived. The Santa rally usually refers to the last 5 trading days of December and the first 2 trading days of the following year combined. They use these 7 days to determine whether the market closes in the positive or negative, and that's the standard they use. Unfortunately, during the 7 trading days from the end of 2025 to 2026, the S&P 500 recorded a negative return. So officially the Santa rally did not happen. What's interesting is that Wu Jones enjoyed the Santa rally, reaching an all-time high. And as you can see, the United States stock market did well yesterday too. So in 2026, on both the first and second trading days, the United States stock market moved in a positive direction. That's how you can see it. Yesterday as well, many sectors and many stocks ended up in the positive, which means the market breadth also improved significantly. As you can see, in the short term, 61.6% of stocks are showing a good trend, and in the long term, the number of stocks with a good trend also exceeds 60%. Therefore, the market breadth right now isn't extremely wide, but it's quite different from the narrow breadth we saw last year. So, we're seeing the market breadth gradually improving, and that's how we can interpret it. Also, the market volatility index isn't bad either. Right now, the VIX has dropped to 14.9, so we can say that the market has remained calm since mid-November. Of course, the AI beneficiary stocks that we favor didn't do very well at the end of the year, but that's because there was a rotation of funds. Now, as rotation is happening, you can see that the market overall is showing a healthy state with significantly weakened volatility. This is the Fear and Greed Index. It continues to stay neutral. Yesterday, it went up from 44 to 47 and is maintaining that level. Let's try to show it on a graph. It hit bottom and is now making a U-turn. Here, it's about to form a cup and handle pattern. So, if the handle is completed, it's likely that the Fear and Greed Index will keep moving for a while and head toward greed. That's what we can expect. Today I'm going to share some very good news with you. The Crypto Fear and Greed Index has also risen to neutral, and if you look at the graph, you can see it's showing a V-shaped rebound now. So, we can finally expect that the long-lasting crypto bear market is now over. Let's keep an eye on whether Bitcoin and Ethereum will recover their previous highs this time and see how long the rally will last. This is last week's American Association of Individual Investors survey result. Market sentiment has greatly improved. Originally, it dropped from 44 to 37, but now it's gone up to 42. And the number of people who have a negative outlook, saying that the United States stock market will be down after 6 months, has also dropped to 27. So right now, quite a lot of investors are expecting that the United States stock market will do well for the time being. And having these expectations isn't a bad thing. But if this optimism keeps rising and goes over 50, then you could say it's reached a peak and it's time for a correction. That's when it can be interpreted negatively. But for now, since the direction is shifting and the mood is gradually improving, it's good to enjoy this upward trend. Next is Mijuan, the top picks performance. Now, first Mijuan, the top picks numbers have changed. 2 stocks have been added, so as you look at the results, let's check together which stocks have been added. Now yesterday, Bitcoin and Ethereum performed well. B2 surged at 10 o'clock, Coinbase was up 7.77, and the ProShares Ultra Ether Exchange Traded Fund, which tracks Ethereum, was also up 7.69, showing good performance. In addition, B2 Mining was up 6.93, Palantir up 3.68, Tesla up 3.10, Meta up 1.29, and Marvel Technology up 0.94. Remember Marvel Technology? It used to be one of Mizon's top picks, but it dropped out as its momentum weakened. As of today, it has been newly included in the index. Let's keep an eye on how Marvel Technology, which has just been added, will perform in the stock market going forward. I think it's worth watching. Now, another stock has been added as well. It's Reddit. Reddit went up by 0.89 yesterday, creating a good trend. You might just know Reddit as a social media platform. Actually, it's also considered a beneficiary of AI. That's because AI companies like ChatGPT and Gemini are generating additional revenue by providing the data they have. And in the case of Reddit, there are a lot of communities formed, and it's full of high-quality data created by people. So, in this era where data is most important for AI, you can see that it's emerging as a major beneficiary. Now, Taiwan Semiconductor Manufacturing Company is up 0.83, Google is up 0.44, and Ethereum is up 0.14. Actually, it went up quite a lot, surging to 3,228. As for Bitcoin, it also soared to 93,820. In addition, Talon Energy is down 0.39 and Nvidia also dropped by 0.39. Tesla is down 0.85, Micron is down 1.04, Advanced Micro Devices is down 1.07, Broadcom is down 1.2, One Credo is down 2.08, and Celestica dropped by 3.03. Recently, Credo and Celestica have shown the weakest trends. I'll wrap it up here. Since it's still early 2026, a lot of media outlets and various institutions are continuously releasing their outlooks for the United States stock market in the new year. So today, I've also prepared an article related to the 2026 United States stock market outlook. Today's article is a bit different. I'll set aside the storytelling aspect for now. I'm planning to look at the technical outlook shown by the charts together with you. It's a long article. Let's take a look at the outlook for the United States stock market in 2026 through technical analysis. According to the chart, there's a possibility of another major stock market rally in 2026. So, as I do the technical analysis now, 2026 doesn't seem bad. That's how it begins. The S&P 500 index hit a new all-time high just a few days ago, wrapping up 2025. But what's more important than reaching a new all-time high is the process of the index returning to the October 27th peak. Let me explain what this means. Let's listen to what this is about. Over the past 2 months, even though the S&P 500 experienced a drop of about 6% from its peak to its low, it absorbed this without any technically significant damage. So, there was a correction after October, but this correction was actually healthy. It was a period of taking a short break. That's what I'm saying. What's more important is the chart structure that was formed during this period. So I'm saying that the chart was shaped very nicely. As you can see in the chart below, this correction period can be classified as a bullish chart pattern. It's not a classic inverse head and shoulders pattern, but the shape is clear, healthy, and constructive. That's my point. The index made a higher low in December than before, and now, ahead of the new year, it's attempting to hold near the previous breakout area. So this is how it's being summarized right now. Now, there are 2 terms coming up here. The first one is the inverse head and shoulders. If you look here, there's a head and 2 shoulders, right? This is basically flipped upside down. So, if the head is on top and the shoulders are below, that's very negative. It's a signal that the stock price will fall. But technically, if this is flipped and you get an inverse head and shoulders, that's positive. Now, so here, the blue line is basically the neckline, right? The price has already broken through this neckline once. That's why, as long as the price doesn't fall below this, if it rebounds here, just looking at this part, the cup and handle pattern is completed. The cup and handle is also a very bullish signal. Right now, just by looking at the chart, there's a very high possibility that it will go up further, so we can interpret this positively. This process may require additional time. However, there is one consistent feature that has repeatedly appeared throughout 2025. What that is that after the market absorbs the gains and forms a bullish pattern, it eventually resolves in a higher direction. Now, I'll explain this in more detail in a little while. This pattern has repeatedly appeared in both short and mid-term timeframes since the April low. It's summarized as having key implications for 2026. If you look here, you'll see the price entered this box range multiple times. After the box range ends, the price breaks the previous high. It rose by a significant margin. The same thing happened here. Especially in April, it was like that as well. Because of Trump's tariffs, the stock price dropped significantly and was stuck in a range for a while, but as soon as it broke out, it surged by a large margin. It showed a rapid increase. But what's encouraging? Now, a new box has just been formed here, so this box is being broken through, and if this breakout is successful, there's a high possibility that the stock will rally again. That's how you should see it. And another thing is, in a highly volatile box range market, large daily fluctuations often occur both upward and downward. In the chart below, after spring 2024 days, with price increases over one are blue and decreases over one are red, showing days with more than 1 point changes. We define days with extremely high volatility like this. You can see here when these days cluster together. When there is a box, usually the volatility is extremely high. So when the stock price moves in one direction like this, it's actually okay. The volatility is lower. But when it's trapped in a box like this, it goes up and down with large swings. Now let's scroll down and take a look at one more comment. But what's even more important is how the nature of the market has changed after the S&P 500 recovered its previous high. And this is highlighted on the chart with a blue arrow. Now, if you look here, you'll see that the S&P 500 recovered its previous high. What this means is that it broke out of the box range. It was stuck in a box, but then it broke through the previous high. Now, let's take a look here. It's marked in blue. It broke out of the box range here, which means it reclaimed the previous high. There was a previous high here as well, and it broke through that too. Same thing here. It broke through the previous high. And here as well, it broke through the previous high. Now, when it breaks through the previous high like this, we can see that it rises by a significant margin. That's how you should look at it. Whenever this kind of reversal appears, the market has shown a continuous upward trend, and at the same time, there have been meaningful changes in the internal environment. Notably, days with fluctuations over one have dropped sharply, making such volatility increasingly rare in a volatility-driven environment. This change can also be clearly seen on the chart. So when the stock price rises like this, volatility actually decreases, and there are very few days when it goes up or down by more than one. That's why we watch the VIX index. I said when it drops, I view it as a positive sign. Because when volatility subsides, you can see on the chart that stock prices tend to rise steadily like this. Shall we check this together? Currently, the S&P 500 is moving out of the high volatility phase that started at the end of October. Earlier, when we looked at the VIX index, we saw that when volatility compresses like this, the index not only reaches new highs, but also has the potential to continue rising further. Let's take a closer look. If you look here, there was significant volatility within this box range, right? But then volatility suddenly dropped. Since it decreased and broke out of the box range, the market could keep rising from here. That's likely why expectations are increasing now. Of course, this scenario is not guaranteed, it's not 100% certain. That's because even at the beginning of 2025, there were cases where the January and February rallies ended in failure, and there were ups and downs due to tariff issues. Here, this is January and February, and there was a box range here too, and it broke out of the box range. So it should have gone up from here, but instead, it dropped. So, by analyzing the stock chart like this, we could see for ourselves that we shouldn't trust it 100%. For a sustained upward trend to form in 2026, just like in the past, there needs to be an improvement in the market's nature at least once. That means the volatility index needs to stay low. That's how you should see it. Now let's take a look at the weekly chart. By broadening our view with the weekly chart, it means we're going to look at things from a midterm perspective. You can also see the biggest bullish breakout patterns from this cycle from another perspective. There have been a total of 4 major breakouts so far, and among them the breakout that occurred in 2025 was by far the most significant movement. And at that time, as we know, it was explained as the period when the market rebounded strongly after a sharp drop caused by the tariff shock. Now let's take a look at this from a technical perspective. Since early 2023, we've had a 3-year bull market, but it hasn't been a straight rise. There were sideways periods. Now, these sideways markets are showing similar patterns. What I mean is, if you look here, there's a cup and handle pattern. And here, instead of a cup and handle, it's an inverse head and shoulders. Here too, there's a cup and handle. And here, it's an inverse head and shoulders. There's something in common between the inverse head and shoulders and the cup and handle. What that is that the new low is higher than the previous low. The lows are rising like this, and that's very positive. And if it breaks through the previous high, we've been seeing the stock price just keep running up like that for the past 3 years. And the encouraging part is that signal is appearing here for the first time. We're here now in January. Right now, something similar to an inverse head and shoulders has formed. You can see it like this. From this perspective, the recent sideways movement near the recent high was a relatively small correction. This time, it was a very short correction, and it didn't drop much either, only about 6%. Such a movement doesn't have to happen right away, but the successful formation of a bullish pattern suggests that another strong rally could unfold. Currently, from a technical analysis standpoint, a great chart is forming. I'll repeat that once more. This time, let's turn the clock back a bit and take a look at the long-term chart since 2013. When you look at the long-term chart like this, by removing noise and eliminating minor movements, we can focus on the largest and most sustained trends. From this perspective, we can clearly see that intermittent corrections ultimately served as preparation periods for major upward movements. What this means is, when you invest in stocks, bear markets come from time to time. Even though it feels unbearable at the time, these bear markets are actually very short and the drops are relatively small. If you look here, you'll see that the bull market lasted for quite a long time and then there was a brief drop. But at the time it felt like stock prices had fallen a lot. It was the same in 2018 and the same in 2019. And during the COVID-19 period, the S&P 500 also dropped. Looking at it now, compared to the bull market that happened before, this was nothing. And do you remember the bear market in 2022? At that time when it dropped by 24, it felt like we were going to die. But as you can see here, compared to the previous bull market, it only dropped for a very short period and then went back up. The 18% drop in April 2025 from Trump tariffs was similar. At that time there was a lot of fear, but now we can see that it was just a passing breeze. From this perspective, the rally that started after the April 2025 low is still in its relatively early stages. What I mean is, this rally is still much shorter than the previous rallies. Instead of stopping now, it could keep rising. It needs to reach this level to match past increases. That's my point. Compared to the longest trends we've seen over the past 12 years, there's still quite a bit of room left. That's how you should look at it. Of course, history doesn't repeat itself perfectly. Nevertheless, what about this framework? It is summarized that this provides a useful perspective for thinking about how the market environment could evolve as we move toward 2026. Therefore, if the current trend follows this historical pattern, the market is still likely to be in the early to mid stage of a larger upward phase. Of course, for all of this to become a reality in 2026, it is essential that the bullish chart pattern plays its role once again. The inverse head and shoulders pattern is forming almost perfectly. It shouldn't drop now, it needs to rise, and that's how it will end. This time I'll add a few words from Mijun and share my personal opinion on what kind of mindset would be good for investing in 2026. Charts help analyze past price movements and trends to predict future stock price directions. The reason chart analysis is effective is because the expectations and psychology of market participants are ultimately reflected in the price. The reason we do technical analysis is because we can read people's thoughts from the shape of the chart. You can see on the chart where people usually buy and where they usually sell. Usually where. You have to remember that the trend of a stock price can change at any time if a new catalyst that hasn't yet been reflected in the price appears. This catalyst can be a positive trigger or an unexpected negative factor. In the end, the market isn't sensitive to known information, but reacts to new revelations, making new catalysts crucial. That's how you should view it. As we approach 2026 and look toward 2027 from an investor's view, we hope the favorable technical trend seen on the chart continues. Having a positive outlook on the market is very desirable, so it's important to invest with a positive mindset for now and to observe the market based on a positive scenario. Having this attitude is crucial to avoid missing opportunities in the successful United States stock market. As I mentioned earlier, bears who always talk negatively may seem very important at first glance, and they look very smart because they explain things logically. When people claim, stock prices will fall for these reasons, it's a bubble, a bear market is coming, you should leave stocks. It sounds quite convincing, doesn't it? But historically it's always been bulls like us, not bears, who made a lot of money. The reason is, the United States stock market is a game with a very high winning rate. The reason why bulls, not bears, made a lot of money historically, it's because the United States stock market has always been on the rise. As we saw in the chart earlier, the periods when the market goes up are much longer and show a much steeper rise compared to the periods when it falls. Therefore, it's really important to always maintain a positive attitude, and I think we need to remember this. But at the same time, we always need to keep in mind that unexpected black swan risks can occur at any time and in any form, because these kinds of risks don't show up on the charts. That's because in most cases, experts don't include them in their forecasts. That's why we need to diversify our investments, keep some cash on hand, and avoid going all in. The reason we say not to use leverage is because the future is uncertain. We humans simply can't know what will happen tomorrow. Therefore, the most important thing when it comes to investing is this. You should believe in a positive outlook, because the odds are in your favor. Since the odds are high, you need to have a positive outlook. However, what's most important is also managing the possibility that your outlook could be wrong. In other words, while staying open to the possibility of an upward trend. At the same time, I think the most important thing is to build a structure that won't be shaken by unexpected shocks, through risk management strategies like portfolio diversification and maintaining a certain level of cash. So, I would like to conclude by saying that this balanced perspective is the most realistic approach to achieving stable long-term investment results in the new market environment of 2026. The last content prepared for today is today's United States stock video, and in the dubbed video prepared for today, Jim Munster, whom I personally trust a lot, appears in it. Jim Munster also shares his professional insights on the direction of tech stocks and investment opportunities in 2026. And in today's interview, Jim Munster also shares the 3 AI beneficiary stocks he personally thinks are the most promising. Now, as 2026 begins, let's find out for ourselves which 3 companies Jim Munster is most optimistic about. That's all for today's United States stock news on January 6th. Thank you for staying with us until the end of today's broadcast. Last January, I went to a nice theater in KLA to watch the movie Avatar. Movie theaters these days are really great. In the past, the seats were really uncomfortable, and there wasn't much of a recline, so if a tall person sat in front of you, it was hard to see the screen, and it was really inconvenient. But recently, when I visit places like Dan Siong Sa or Piccadilly in Kuala Lumpur to watch a movie, since there's no online reservation, you have to go there and buy the tickets in person. I used to go a week in advance to buy tickets, and then go again a week later to watch the movie. When I tell kids about this, they can't believe it and say it's better to just watch Netflix at home. But back then, there was no Netflix, which kids these days don't really understand. We lived in a very inconvenient era, but there were some good parts too. When Netflix first came out, we sometimes regret not investing in Netflix stock, thinking how great it would have been. But kids these days say things like, "How could that even happen? It's better to just watch Netflix at home." Kids these days don't really know that there was no Netflix back then. When Netflix first came out, we sometimes regret not investing in Netflix stock, thinking how great it would have been. But we have artificial intelligence. Our kids benefit from AI from a young age, but unfortunately, they don't have the opportunity to invest in AI. But we do. We are witnessing firsthand how the world is changing because of artificial intelligence. We are the lucky generation with this valuable investment opportunity. I'm confident we can create significant wealth from AI beneficiary stocks. Let's all keep going together until the day we all retire through investing in United States stocks. Have a happy day. Thank you.
Let's take a look at the outlook for tech stocks in 2026. Gene Munster, the managing partner of Deepwater Asset Management, is joining us. Gene, it's great to have you with us today. Shall we start by talking about AI? The biggest issue that practically dominated the tech market in 2025 was AI. At the beginning of 2025, the emergence of the Chinese company DeepSeek shook many people's perceptions about the direction of AI that was being considered in the United States. At this point, what trends do you see emerging? How do you assess the current state of the AI market, and do you think there is a possibility that it will face challenges in the future? I have another important question as well. I'd also like to ask if you think the AI sector will be valued even higher in terms of stock prices this year.
Yes, in my view, the major investment trend in AI is still in its early stages. For the next 2 or 3 years, there's a high possibility that the Nasdaq will continue to achieve annual returns of over 10%, and I think a significant part of that momentum will come from AI. Especially, I believe that companies with AI as their core business are likely to achieve even higher returns. Of course, saying that it's still in the early stages, since the end of last October, starting with the earnings reports from Meta and Nvidia, the market sentiment has changed. And as concerns like the deepfake issue have seeped into investor sentiment, I understand that what I'm saying might sound a bit awkward. However, in the bigger picture, I believe these companies are likely to grow faster than market expectations, even in 2026. For example, today Foxconn announced its December quarter earnings. Foxconn is both a customer and partner of Nvidia, and some GPTs are involved. Their sales growth rate was 22%, while the market expectation was 13%, so there was an 8-point sales surprise. I think this is a sign that the high growth phase is lasting longer. Also, tonight at 4 post-meridian Eastern Time, Jensen Huang of Nvidia will give a keynote speech at Consumer Electronics Show. In his last major keynote on October 28, he projected this year's sales growth rate to be around 54%, the 50%. And this does not include China or new orders. So I believe there's a good chance that Nvidia will grow by more than 65% this year. In addition, tonight at 9:30 post-meridian, Lisa Su of Advanced Micro Devices will give a keynote speech at Consumer Electronics Show, and I expect her message will also be along the lines that it's still early days. Taking all of this into account, I understand that the strategy of continuing to invest in AI might feel like a well-known playbook, but I still believe that this year's earnings estimates are generally set too low, and since the AI cycle is still in its early stages, I remain optimistic.
Based on expectations, I think it would be best to start by looking at Nvidia first. Currently, the consensus is expecting a growth rate of around 50, but you can see that it's possible for it to reach 65 or even higher this year. Do you think Jensen Huang will present that outlook fairly clearly in his keynote speech today, or do you think he'll take a more cautious approach in his wording and tone since expectations are already so high? That's a tough hurdle to clear and not easy to beat those numbers.
Yes, to sum up, the main point of what I'm saying is this. I think it's highly likely that Jensen Huang will emphasize again today what he said on October 28th. According to Blackwell and Rubin, they expect cumulative sales to reach $500 billion by 2020, and he will likely confirm this equals 54% annual growth. And I think he will also mention that this figure does not include sales from China, nor does it reflect additional orders. At the same time, I think he will likely give signals that demand is still very strong. So I think he will stick to the existing guidance number of 54, but he will definitely imply that there is plenty of upside potential within that. Looking at the gap between Wall Street's expectations, what Nvidia has said, and the actual market situation confirmed in today's Foxconn earnings, you can feel that investors and analysts are still cautious about whether this bull market can continue. But my answer to the question is clear. I think today is likely to be a good day for Nvidia, and tomorrow will be as well. That's because Jensen Huang's remarks are likely to converge on one message. Demand is so strong that supply just can't keep up.
Is Nvidia your top stock pick?
In fact, we do hold Nvidia, so if you want to know which stocks we prefer the most, you can just look at our portfolio. Nvidia is definitely in there. And do you think that by 2026, Google is likely to continue surprising the market? According to what Samsung mentioned today, the number of devices equipped with Gemini to be shipped this year will be about 800 million, which is double last year's 400 million. Given this trend, Bristol tops our list. Also, the news about Foxconn that I mentioned earlier is seen as positive for Apple as well, and we believe that Apple is likely to show the best performance among large-cap stocks in the first half of this year. The three core stocks we are currently focusing on the most are these.
A small dream is important. Shall we plant a hopeful future together? Growing little by little every day, excitement in the night. This time, Lee Actor Kick won't lose either. The result is just a continuation of the process, and I'm not afraid even if a dark adjustment comes. Miju, I'll hold your hand and go forward. I'll become the light of an unseen tomorrow. A happy investment, cheering for each other's dreams. Let's walk together down this beautiful slope. A happy investment together with Miju. All of us will bravely walk this beautiful slope together until the day we retire from Gupju City Hall.
A beautiful slope.